Oh, hey, it's Ray. There is one question I get asked all the time by people, including family and friends. And that is, what do I need to qualify for a mortgage? And so today I'm hoping that I can clear up some of the confusion and point you in the right direction. Now, it's no secret that unless you happen to be swimming in a pool of cash like Scrooge McDuck, you don't just decide to go out and buy a home on a whim. Likewise, you don't just wake up one morning and say, I think I'm gonna apply for a mortgage today. Buying a home is the single largest purchase many people will make in their life. Millions of people in America have the dream of owning their own home. But impulsive decisions and little to no planning can, at best, cause them to spend too much money. And at worst, it can actually disqualify them from receiving a loan altogether. So what do? You plan. The truth is, planning takes time, and if you're here watching this video, you're already on your way to making the right moves to achieve your goal. The first step in any new endeavor is to ask, how? How can I do this? What steps do I need to take to make this dream a reality? That question, how, is exactly what I hope to help answer. So let's get started. When lenders are looking at mortgage applications, they tend to look at a few different things. The first and possibly most obvious, employment. While this isn't a hard and fast rule, most lenders like to see at least 1 year of continuous employment within the same industry. This does have the potential to leave the door open for you to switch employers. So long as there is no gap in employment history, you are in the same industry, and you don't take a pay cut. In fact, if you receive a pay raise, that has the potential to actually look a lot better. Keep in mind that policies like this tend to vary from lender to lender, so check in with your loan officer to be sure. Okay, on to the next thing. Good credit history. You probably already know this, but in general, lenders like to see that you have a good credit history. It's a good rule of thumb to aim for a median credit score of 700 or more. If you find that you're not there yet, or that you don't really have credit history at all, now is the time to get started. Spend the next year or more rebuilding your credit. If you hadn't had a card before, try opening a secured credit card. Be sure to pay your balance off every month and don't miss any payments. If you already have a credit card but you're carrying a balance, pay it off as soon as possible and don't miss any payments. This should have a dramatic effect on your credit score. Quick little side note here. If you are 6 months or less away from applying for a mortgage, don't apply for any new credit cards or loans. I'm serious. This will almost certainly get you denied for a mortgage, or at the very least cause you to receive a much higher interest rate. Third thing, proof of income. After the financial crisis of 2008, this one seems like pretty much a given. Long gone are the days of stated income loans. Lenders actually want to see proof that you make as much money as you say that you do, so that they know for sure that you can make the payments on your mortgage. They won't just take your word for it. Proof of income may be requested in the form of tax returns, 3 to 6 months of pay stubs, or W-2s. As always, requirements may vary, so check with your lender. Fourth thing, down payment. You may be a little surprised that I didn't mention this earlier, but here it is. Often considered the biggest hurdle for many people to home ownership is the required down payment. Still, I think a big reason why so many people think that they'll never save enough money for a down payment is actually due to a big misunderstanding. For years, possibly decades even, there is a persistent rumor that says you absolutely have to get a 20% down payment to receive a loan. This is a blatant lie. It is a fact that you can put as little as 3.5% down with an FHA loan, and you can put as little as 5% down with a conventional loan. This opens the door to home ownership for many people who otherwise wouldn't be able to afford a home at all. Still, the median price of homes in the United States right now is hovering over $400,000. That's thousands of dollars that are needed for a down payment. Actually, it's $14,000 if you're working with a 3.5% FHA loan. But don't let the big numbers scare you. This is still achievable with a multi-pronged approach. First and foremost, creating a budget and following it will help you begin to start saving for a down payment. With the recent increases in the federal funds rate, interest rates are rising for savings accounts too. Opening a high-yield savings account can help you save more money in interest on the cash that you've already saved for your down payment. If your employer offers a 401k, you should be maxing out your contributions and taking advantage of any employer matching program that they offer. Now, you'll want to talk to a financial professional about this, but it is possible for you to borrow from your 401k for a first-time home purchase. You'll need to pay the money back at some point, or you could face penalty charges. Finally, there are many down payment assistance programs offered by state and local governments. There are also down payment assistance, grants, and scholarships offered by many nonprofits and private organizations. You'll want to do a thorough search of what resources are available to you in your local area. Fifth thing, proof of funds. It's not just enough to say that you have a down payment. Just like lenders want to see proof of consistent income, lenders also want to see proof that your down payment actually exists too. They also want to make sure that it didn't just appear out of nowhere. To do this, lenders will ask for your bank statements and then they'll have their forensic accountants go over them. This process is called sourcing. Lenders want to be able to trace back the source of your funds to prove that you really came up with this payment on your own. And, make sure that it wasn't criminally laundered or anything. A good rule of thumb is to also make sure that your funds are seasoned. All this means is that, like a good marinated steak, your funds have stayed still, untouched, and seasoned for a set period of time. Lenders like to see that your funds have stayed put for a period of 3 months or more, but again, this can vary. Sixth thing, gift letters. It's not uncommon for first-time homebuyers to receive down payment funds as a gift from relatives. If this happens, those funds cannot be sourced and seasoned. So your lender may want you to give them a gift letter to explain that the funds were given to you as a gift. It should be written, signed, and dated by the person who gifted the money to you. Seventh thing, rental history. Don't be surprised when lenders ask for your rental history. Just like when you're applying for a new apartment, your rental history will be used as an indicator to determine whether you are risky to lend to or not. A good, solid rental history can show lenders that you are likely to make your mortgage payments on time. Finally, the eighth thing, identification. Short and simple. Lenders need to see your identification to prove that you are who you say you are. They want to make sure that there is no fraud being committed and that there is no identity theft being attempted. I'd say that's a plus for everybody involved. So that's the 8 things that you need to qualify for a mortgage. Mind you, this is not a definitive list. Your lender may request more or less from you, but it's your job to make sure that you ask them exactly what they need from you. And buying a home is a really big deal, so I highly recommend that you seek the assistance of a real estate professional or even a lawyer. It's always a really good idea to have a team of professionals in your corner who are able to help you when you need them to. As always, if you found this video helpful today or you've learned something new, go ahead and give this video a like. If you're interested in hearing more from me about mortgages, real estate, and personal finance, then subscribe to this channel. I look forward to showing more great information with you in future shows. But until then, I'll see you next time.